Can you see the screen now?
Yes.
Is it clear now? Okay, fine. Now, last week I couldn't do any classes. As I told you, I was so busy with the year-end audit. So auditors were there, so I had to go to office last Saturday. So sorry for that. And do you know anything about audit? What is an audit? What is the purpose of doing an audit? Any idea? I was an auditor
Yeah,
long time back.
they check the accounts.
Okay. So basically, audit means now usually the companies they have to maintain books of accounts. Okay, based on the what we have learned, debit and credits. So based on that, we need to maintain books of accounts. So at the year end, auditors will come and check our work. Okay, whether we have done properly based on the international accounting standards. There are standards and principles that we need to follow. Okay, so based on that, whether we have done, whether we have made any mistakes, errors. Okay, so they come and verify our books of accounts. So after verifying that, they will issue a report. Auditors will issue a report. So that report is known as audit report. Okay. So what is the purpose of issuing an audit report? To see whether the company is maintaining proper books of accounts. Okay. So why the audit report is very important? Why it is very important? Because for example, let's say you need to the companies need funding, no? The company needs capital. So owners will invest. Apart from that, then if they need more capital, more money, they will have to go and take a loan from the banks. Okay. So when they go to the bank, so bank will ask for an audit report. They will say, okay, you bring your audit report. So if you don't have an audit report, they will not grant any loans. So this is the purpose that most of the companies, it's a requirement. And also based on the audit report, we calculate the profit, no? Based on that, the companies will have to pay taxes to the government. Okay. So these are the main purposes of companies will have to maintain proper books of accounts to do an audit year end. It's a compulsory. Okay. So now today's topic also it's more or less it's relevant to that topic. Why? We are going to discuss about errors not revealed by the double entry system. Okay. Now, before I move on to that, let me discuss about. Still, I think I didn't get any message from uh, Bashini. I don't know whether she will join. I'll continue. Okay. Now, before that, I just want to discuss about a trial balance. What is a trial balance? And what is the purpose of preparing a trial balance? Can anyone tell me what is a trial balance and what is the purpose of preparing a trial balance? Shenara, what is a trial balance? What is the purpose of preparing a trial balance?
They're like the balances of ledger account.
Exactly. Okay. Now you know the accounting process, no? What is the accounting process? First of all, you have to start with the source documents. Okay. You will have invoices, purchase invoices, okay, receipt, payment vouchers. So based on these source documents, you will update your day books. Okay. So day books also we learn sales journal, purchasers day book, sales return journal, purchasers return day book, general journal, cash book, petty cash book. So these are the journals or the day books that we maintain. From the source documents, you update your day books. Then from the day book, you transfer the transaction to the ledgers. Okay, ledgers where you maintain accounts based on the double entry accounting system, debit and credit. Okay, so when you take ledgers, there are three types of ledgers we discuss: general ledger, accounts receivable ledger, or we call it debtors ledger, and accounts payable ledger or creditors ledger. So general ledger is where you maintain all the expenses, revenues, incomes, those kind of accounts. Whereas debtors ledger where we maintain the customers' individual accounts. Then creditors ledger or accounts payable ledger, we maintain all creditors' individual balances. Okay, source document, day book, then we have the ledgers where you maintain. After recording in the ledgers, what you need to do is you need to prepare a statement to see the accuracy of the double entry accounting system. How do you know you have accounted based on the double entry accounting system, whether you have debited properly, whether you have credited properly? How do you know that? Okay, so to know whether you have properly recorded the transactions, what you need to do is you need to prepare a statement. That statement is known as a trial balance to see the accuracy of your double entry accounting system. So total debit should tally with total credit balance. Is that clear? So purpose is to check the, it's not moving. Okay, so trial balance is essential to ensure the accuracy of the bookkeeping entries before preparing the financial statements. You prepare financial statements. Financial statement means you have what? You have income statement, right? You have income statement. Then you have, we call it balance sheet. Okay, there is another name we use, financial position. Okay, that you will learn later, financial position. This I will explain you in detail. Okay, income statement is where you calculate the profit or loss, whether you are making, company is making a profit or loss. That is the purpose of maintaining income statement. Then the balance sheet where you have assets, your equity balances, and your liabilities. Okay, so these accounts will be there. Now, so the main purpose of preparing a trial balance is to see the accuracy of the bookkeeping entries. Bookkeeping entries means you have to debit and you have to credit. Okay, so dual concept. No, if you debit one account, you should credit one account, the other account. So to check the accuracy, we prepare a trial balance. Okay, so trial balance will look like this. So this trial balance is extracted from where? Ledgers, no? From the ledger. So you will have cash account, you will have accounts receivable account, okay? You will have inventory account, your accounts payable account is usually a credit balance, long-term liability is a credit balance, okay? You just put the debits, all the debit accounts, and you need to list down all the credit accounts. And finally, the total should match with your total debit should match with your total credit. You understand? So this is the main purpose of preparing a trial balance. Okay. So once you prepare a trial balance, your total debit should match with total credit, right? If it doesn't match, what does it mean? If this total debit doesn't match with credit, what does it mean? Which means you have not done you have not recorded your transactions based on the double entry accounting system. You might have made a mistake, or you might have made an error. Okay, so therefore your trial balance will not match. So therefore a trial balance is a must. We call it TB. Okay, trial balance, it's a must. Okay, so based on this you prepare your financial statements, income statement, balance sheet. So everything is based on the trial balance. So basically, so trial balance is a statement where we list down all the debit entries, debit accounts, and all the credit accounts to see the accuracy of the double entry accounting system. Okay, now when you record transactions, okay, the accountant is a human being, no? He might make mistakes. Okay, so there are certain mistakes you will not identify from the trial balance. Okay, so there are two kinds of errors. There are certain errors will not affect the balancing of the trial balance. Okay, so these are first type kind of errors. Okay, second, there are certain errors will affect the balancing of the trial balance. What does it mean? If you make these kind of errors, still your trial balance will balance. Your debit entry will match with credit entry if you make these kind of errors. So this is what I am going to discuss. If you make the second type of errors will affect the balancing of trial balance, then definitely there will be a difference in the trial balance. For example, let's say this side, your debit side is 187, no? Your credit side may be 190,000. So obviously you can identify by preparing the trial balance, because your credit side is 190, your debit side is 187. So you can identify these errors. But if you make this kind of errors that will not affect the balancing of trial balance, still your trial balance will balance. Okay, now we'll see what are the types of errors that will not affect the balancing of trial balance. Okay, is there any questions? Do you have any questions? Is that clear?
Yes.
Okay, Bashini, how are you? Okay, so we'll continue the session. Okay, now we'll move on to the following errors do not affect balancing of trial balance. Okay, there are 7 types of errors. If the accountant makes these kind of errors, still your debit balance will match with credit balance. Okay, so what is the first one? So you can't see, no? I will move my, you can see? No, my, this thing, okay. Errors of transposition. What does it mean? Errors of transposition. When the numbers are entered in wrong sequence in both accounts. Now, what is a double entry accounting system? When you debit one account, you should credit the other account, right? Okay. Now, when the numbers are entered in wrong sequence, for example, let's say now you have purchased on credit, let's say $125 worth of goods. Okay, now instead of recording it as 125, okay, you might record it as 152. Is it possible? Can, no? Okay, because in a hurry, okay, you have to record the transaction. What do? Instead of 125, the accountant might record it as 1552. Is a sequential error. Okay, instead of 125, he just change the numbers 152. Okay, so these kind of errors are known as errors of transposition. Okay, so why accountants make these kind of errors? Some accountants, I was an accountant. Okay, I made these kind of errors. Why? There are several reasons. So one reason is due to carelessness. Okay, you are not focused, you are not concentrating on your work. Okay, then we make mistakes. You understand? And the second one is uh, sometimes you are the only accountant in the company. There is no segregation of duties. Okay, so I am recording all the, so based on the source documents, I maintain my day books. Okay, from the day book, I transfer all the transaction to the ledger accounts. From the ledger accounts, I extract the trial balance. Oh, only one accountant. I do all the accounting related transactions. Okay, so I will have undue pressure. Okay, then you tend to make mistakes. We make mistakes. You understand? Okay, and also sometimes lack of knowledge. Some accountants, they don't know where to debit, where to credit. Okay, so these things also happens. Okay, you don't know where to debit, where to credit. So if you, instead of debiting, you credit, then it's an error, it's a mistake, right? And also sometimes some people, okay, they make deliberate mistake purposely. Why is that? Some managers, they make deliberate mistake purposely, they do mistakes. Why is that? Because to get some financial benefits. One example is when I was working in a company, okay, one general manager, he used to, towards the end of the month, what he does, okay, he he records some bogus sales incomes, okay, not real, not genuine sales towards the end of the month. Why does he do? Because to show more sales. If you show more sales, what will happen? Your profit will be more. Based on the profit, higher profit, he will be paid a commission. You understand? So some people do these kind of ungenuine, unreal transactions to show a better performance. That was another thing that people do. Okay, so these are also known as errors. Okay, mistakes to get some financial benefits. Okay, now these kind of transactions are not genuine, not what do you call, you can't say not real, but it's a real transaction, but it's a mistake. Okay, you have done a mistake. Instead of writing 125, recording it as 125, you record it as 152. Sequential error. So these kind of errors are known as errors of transposition. Please remember that. Okay, you will get questions from these kind of this area. Second one, errors of original entry. What does it mean? When an item is entered using an incorrect amount. What does it mean? For example, let's say your total sales, let's say 960. Instead of 960, you record it as 96. Or else we can say sales value was 880, you record it as 88. Okay, it's a completely a different, incorrect amount. So original amount should be 960, but accountant incorrectly recorded as 96. So these kind of errors could happen. Okay, these are known as original entry, errors of original entry. Is that clear? Any questions? Third one, errors of principle. not principal, not your principal. This is errors of principal. Okay. When an item is entered in the wrong type of accounts. Now, as you know, that we maintain uh, books of accounts based on certain principles. What are the principles? Based on accounting equation, based on double entry accounting system. When you debit one account, you should credit another account. Okay. There are different classes of accounts. Okay. So we have different classes, no? Different classes of accounts. What are those? We have expenses accounts. Huh? We have revenue accounts. We have revenue accounts. We have assets, right? We have liability accounts. Okay. So errors of principle means when an item is entered in the wrong type of accounts. Okay. So as I explained you, we have different classes of accounts. What are the classes of accounts? We have expense accounts like salaries, wages, okay, repairs and maintenance. Those are expense accounts. What are revenue accounts? Your sales, right? Your sales income will be your revenue accounts. Then we maintain assets accounts. What are assets? Motor vehicles, machineries, furnitures, these kind of assets. Then liabilities. You have creditors, bank loans, these are liabilities. Okay. So basically, you need to, as an accountant, you need to record transactions on these different classes of accounts based on the particular transaction. For example, let's say now you bought a motor vehicle. Let's say you bought a motor vehicle for, let's say, $5,000. Okay. What if instead of this is motor vehicle is an asset account, right? You need to account it in the asset account. What if instead of recording it as an asset, you record this as an expense? What will happen? What could happen? Can anyone tell me? What will happen to the business? So you bought a motor vehicle. Okay, it should be an asset. It should be an asset. Okay, sorry. Uh, so what will happen? Can anyone tell me? You bought a motor vehicle worth 5,000. So it has to be recorded as asset. Instead of recording it as asset, you record this as an expense. So what will happen? For example, let's say now you have revenue or sales. Okay. Let's say 1,000. You have expenses, right? To calculate profit. Let's say you have purchases 400. Then you have salaries you have paid 300. Okay. Then let's say other expenses 100. So what is the profit? 700, 800, 200 will be your profit, right? This is your profit. Now, if you, instead of recording this motor vehicle 5,000 as an asset, you record it as an expense, what will happen? What will happen to your profit? Now, still we'll take the same example. Sorry, 1,000. 1,000. Your purchases 400. Your salaries 300. Your other expenses 100. In addition to that, you have recorded this as what? Motor vehicle repair expenses. Motor vehicle repair expenses. Okay. So what will happen? Instead of 200 profit, what has happened? 400, 300, 700, 800, 5,800. Okay, so 5,800, 5,800 minus 1,000. It will show 4,800 a loss. Is that clear, Puta? Okay, so see the mistake. What you have done? You have made an error. It's a principal error. Instead of recording it as an asset, you record it as an expense. So as a result of that, what happened? So this 5,000 you treated as motor vehicle repair as an expense. So as a result of that, the profit turned into a loss. It's a principal error. Is that clear? Okay. So what is the other type of error? Reversal of entries. What does it mean? When the correct amounts are entered in the correct accounts, but the item is shown on the wrong side of each account. Okay, so let's say you purchased goods for $500. Okay, when you purchase on credit $500, where you should debit? You should debit your purchasers account and you should credit your creditors account. Okay, so credit purchases. Instead of debiting purchases, you are crediting purchasers and you are debiting creditors. So this is called reversal of entries. Okay, when the correct amounts are entered, you have recorded the correct amount, but the item is shown on the wrong side of each account. Completely reversal. So credit purchasers should be debited to purchasers account and it should be credited to creditors. Instead of that, what you have done? You credited your purchasers and you debited your creditors. It's a complete reversal of entries. Okay. And the next one, errors of omission. So omission means you completely omit the transaction. You completely forgot to record the transaction. Okay, so still the trial balance will balance, no? That is errors of omission. Compensating error. Compensating error means an error is set off by another error. Okay, so that I will explain in detail. Okay, the next one is errors of commission. So when a correct amount is entered but in the wrong person's account. For example, let's say R. Robert. You received an amount from R. Robert. So what you do? You go and debit to P. Robert's account. Okay. So it's a errors of commission. Okay. So these kind of errors are known as errors of commission. So basically we discuss errors of transposition, where you record an amount in wrong sequence, errors of original entry, errors of principal, errors of reversal of entries, errors of omission, compensating errors, and errors of commission. So these are the types of errors. These are the errors do not affect the balancing of the trial balance, which means your trial balance will balance. Your trial balance will balance if you make these errors. To remember this, okay, you can remember like this. There is an acronym, you can use this. What is that? Top rock. Okay, it's not clear here. I will have to escape. How do I escape this? Errors of principal, errors of reversal entries, errors of omission, compensating error, errors of commission. So finally, top rock. Okay. So T means what? Transposition. O means original entry. Okay. Then P means errors of principal. R means reversal of entries. O means omission. You can interchanges, doesn't matter. Okay. Then compensating errors and errors of commission. Okay. So you can easily remember this top row.